Hello, this is Bob Joyner, and this is the second part of a three-part video series I'm doing about the trader's mindset, in which I'm trying to kind of go into the mindset a little bit about what creates successful traders and what it helps to do and to think when you're in the state of trading. Part two here is talking about acceptance. If you haven't already seen the other video, what we're doing is we're talking about these three different aspects, kind of like different sides to a prism, different sides to the same thing, but we're kind of going at it a little bit differently on each side. The first one we talked about flow, and then in this one we're talking about acceptance. So acceptance means seeing the market for what it is right now and then embracing our responsibility for adapting to its ever-changing momentum. Acceptance is big because if you're not flowing, and we talked about flowing in the last video, part of flowing with the market is that you have to accept it for what it is. You know, if you find yourself arguing with the market, it's probably because you're wrong. So we want to get into the part where we accept what's happening in the market. I like this quote by Dr. Alexander Elder, in which he says, "Be neither a bull nor a bear, but only seek the truth. A biased bull looks at the chart and says, 'Where can I buy?' A biased bear looks at the same chart and tries to find where he can go short. A top flight analyst, however, is free of both bullish or bearish bias." And then a quote from Mark Douglas in Trading in the Zone: "Learning how to redefine your trading activities in a way that allows you to completely accept the risk is the key to thinking like a successful trader." Learning to accept the risk is a trading skill, the most important skill you can learn. So again, we're back to this idea of acceptance. You've got to accept the market for what it is. You've got to accept your risk. You've got to accept your responsibility in the trade. If you're blaming other people, you're blaming a chat room leader, you're blaming your uncle who gave you some trade advice, whatever, you're not accepting your responsibility in the market. You're not accepting your responsibility to flow with the market in order to make profit. So I want to talk about two different things here in the context of acceptance that can kind of prevent you from being in the flow, that can prevent you from accepting the market as it is. And there are many variables, but we're just going to look at two here. And two words that you may not have heard before. Scotoma is basically a blind spot where you don't see something. So I'll show you some examples of that. And then confirmation bias is once we believe something to be true, we seek out evidence to support our belief rather than being open to contrary evidence. So let's take a look at both of those things, and I'll give you some examples of each. This is a pretty famous illustration. You may have seen it when you went through school. The title of the illustration is called "My Wife and My Mother-in-Law." But if you look at this drawing here, what we see and what we perceive is limited based upon our bias. We might see a young lady or an old woman, but once we see one, it's difficult to see the other. So as you look at that picture, identify, what do you see? And I give you a second to look at that. But once you identify that, which one that you see immediately, you probably cannot see the other because you've got a scotoma to it. You've got a blind spot. Once you see one thing, it's tough to see the other. And that just kind of illustrates the same thing that we do when we're trading, is that once we get locked onto a certain view of what's going to happen with a stock or with a trade, it's difficult for us to see the alternative. Okay, so back to this illustration, for example, the chin right down in here, like coming into her dark coat. You've got this big nose right in here. You've got these eyes right through here, right? That's the old woman. And then if you look down at the bottom picture, you can kind of see the same picture. You can see the young lady, which is green lines show an ear here. You can see the kind of the turn of the face. The brooch is down here on her neck, right? And you can kind of see the young woman. So it's kind of an interesting thing, but I'm just trying to illustrate the point that we have scotomas, that once we lock into a certain view of things, we lock out others, and that means we're not accepting fully what's in front of us. Confirmation bias is the other thing that can kind of keep us from accepting things. An increase in our certainty about the outcome of a particular trade often makes us look only at the information that supports that opinion. I'm sure you've done that before. Again, you get locked onto a certain view that you're not open to the new reality. You're not flowing with the market. So we might look at a different time frame to support our trade. We may be day trading, and then we suddenly look at a swing trade chart, even though that wasn't the basis for our trade, because we're looking for some kind of confirmation that maybe we're not wrong after all. And we're fighting the market. As we do so, we're not accepting what the market and what the charts are telling us at the time. We might get mad at the market, but we will avoid the new reality because we just know that we're right. Our certainty makes us unopen to new information, and that might challenge our belief. And we will go to great lengths to protect our self-image and those beliefs, even holding on to a losing trade until it has created a devastating loss in our account, just because we will not accept the new reality and just because we're digging in our heels, right? And we just don't want to be wrong. Last paragraph there, the result is not just a loss of money, though. We lose the trust we had in our trading system, even though the outcome of this trade is statistically unimportant. We lose our self-esteem, we lose confidence in our ability to trade, and this perhaps is the most devastating loss of all. Once you've gone down that road to where you hold that trade until it becomes a huge loss for you, then you become psychologically damaged as a trader, and it takes time. It could take days, weeks, or even longer to get over that loss, because you realize just how damaging your self-sabotage can be by your refusal to accept the new reality. A quote from Mark Douglas: "The fear of admitting we are wrong causes us to place an inordinate amount of significance on the information that tells us we're right." So again, some of the trader's mindset, some of the things that goes on inside the head of a trader, is what we're trying to get at here. A quick interjection here, and we're going to move on. I've just recently opened up a new Facebook group. It's a private group, but you'll find the invitation in the link. And this group focuses totally on trading the SPY options. And you're welcome to follow the link in the description box and seek out an invitation to that group. And then also here are a couple other videos that you might find interesting, and a link to the last and the third part of this three-part video series. Thanks for watching. Hope you subscribe and follow me on YouTube. Thanks.